How we doing, traders? Welcome to it, the best pre-market prep show in the world. We're here with, of course, Joel Elconin, Dennis Dick in here. I'm going to go ahead and bring them already into the show. We're going to drop the intro right here. I hope you guys are ready for a great show. You guys see it. I'm bullish Starbucks this morning. Let's get it going here. All right.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
How we doing, team? Let's go ahead. Let's get it started. Joel, if you can go ahead and bring your screen on up here, get your charts on up. We'll get that on to the screen here. Let's go ahead. Let's do this.
Okay.
How are we doing this morning?
Good morning. Good morning. And I guess, is there a happy anniversary song that you sing? A happy anniversary? This is Mitch's second anniversary at Benzinga, and he's on the move here. We're in the red by 13 3/4 handles, 41.45. Kind of a fluffy last 15 minutes. We gave it back, just kind of hanging out mid-range on the session. The all important close, 58.75. Pre-market high, 58.25. I don't have anything for you at that current low of the day, 41.35. Crude continues to rip up $1.25, 120.66. Gold in the green at 18.54.20. That's up 210. Silver trying to get over 22, but it's down 19 cents at 21.99. Bitcoin under 30, back over 30. Net down $705 at 30,340. And Ethereum futures, they're down $41 at 1802.50. Let's bring in Triple D, and Triple D is in the trade cave here, and with his pick and shovel. How you doing, Dennis?
Oh, sometimes you're the hammer and sometimes you're the nail. Today I'm definitely the nail. I'm getting hit on the head here on pretty much every single position I got overnight. It's been a long time since I've had this bad of luck, but I'm on the wrong side of everything today. So definitely digging out of a big hole here. I don't think I've had a down day in about 2 months. So it's been overdue, but it's getting me today. It's going to be a big hole to dig out of.
Yeah, then you'll call me at 10:30 and say,
not digging out of this one, Joel. Wrong side of too many stocks.
But Dennis, aren't you on Twitter? Because if you're on Twitter, you should never have a
loss.
Yeah.
Yeah. None of the Twitter
the bots will fix it.
If I just followed everyone on Twitter, I wouldn't have losing days. I wouldn't have losing trades. You only have winning trades. Losing trades don't exist on Twitter. Only
of course,
winning
Dennis.
trades.
Don't you know that?
That's how it works.
You win on 100% of trades. Isn't that the way it works?
100% of trades.
Also, you could.
And you never take a loser. That's the way they do it on Twitter. And if you do take a loser, you never admit to it. Never admit to it on Twitter.
That's called paper hands. That's called paper hands.
Also,
it's paper hands if you take a loser for sure. You're right. They have I didn't even realize that. They actually have a term for it. When people actually take losses, paper hands. I never even realized that, Mitch.
Well, not only can you have not any losing trades or anything, but if you, I don't know how these people end up in my screen, but you could be a professional bodybuilder and work out all the time. There's people that are just super fit. I don't know.
That's what I do. Let's go.
It's what social media is. It's a place to brag about yourself. That's why I'm never on Facebook. Everybody's just on there showing how awesome their lives are. I don't go on that stuff because it just makes you feel bad about yourself because you're comparing yourself to the impossible. That's why I always say, I had this rant about 3 weeks ago on this show. Don't compare yourself to the traders on Twitter because they're all liars. Don't 100%. Compare yourself because it's impossible. There's nobody with 100% win rate. There's nobody. So just don't even compare. most of the people just are disingenuous and they're just not talking about their losing trades, or they don't take their losers and they don't consider those losers because eventually those will come back. And that's just stupid. They're losers.
Well, let's go ahead. Let's get into the action today. Let's talk about Roku. Roku's on everybody's eyes this morning after Business Insider report talking about heating up talks with Netflix for an acquisition. Can you guys imagine if this would happen? This would definitely be one of the biggest deals we've seen in a long time. What do you guys think about this with Roku and Netflix?
I think there's almost zero chance this happens. So it's from Business Insider, which is definitely not the Wall Street Journal. I'll just say that. And down up 7% on this is a gift, in my opinion. With that being said, the technicals actually weren't that bad on Roku. It stopped going down. Some of the growthy stocks are okay. But I think if you're buying this on the possibility that Netflix is going to buy Roku, I think there's very little chance. Netflix is trying to fix their own stuff right now. They're not in the acquisition. Netflix is, obviously looking, at their own problems here. So yeah. I don't think they're in the market to go buy a streaming service here right now. So I think very, very, very little chance that Netflix buys Roku. With that being said, I don't mind the technicals on Roku. I'd actually maybe be a buyer of a pullback on it just because the technicals look okay. Above 100, it gets interesting. But if you're coming in here thinking that Netflix is buying Roku, I don't think there's any chance that's going to happen.
We got the pop, and right now, I don't think there's anything here on the dailies. Let me do a quick check. Yeah, this 102 is just sticking out to me. Like, boom, you hit 102, got close, you hit 102, you backed off $2. So whoever's been buying, they're selling at 102. If you get over 102 or you get some kind of real news on this, then there's room on the upside. But until it takes out 102, definitely not a buyer here, and a little skeptical. With these kind of things, if there's smoke, you want some fire. You want to hear something from the company. I mean, if Netflix comes out and says, no, we're not interested in this in the world. So watch out on this one. 102, that's a big number.
You do have to look at who's reporting it. I mean, when we get news breaking from the Wall Street Journal, the Dow Jones, I mean, they, very connected. They break stuff like that. I don't know how many mergers Business Insider has broken. I don't have the stats on that in front of me. So you just have to keep that in mind as well. And this, I believe, did originate from Business Insider, correct? Because that's what I didn't actually even look any further, but I saw it on Business Insider, and I believe it originated there. Yeah, I'm not 100. Yep. Can you verify that?
Yes, I can.
It did originate at Business Insider?
Yes. Okay. Yes, it did originate there. So let's go ahead. I think let's just move forward. I even see in the chat, they're like, why would Netflix do this? I think they're thinking the same way we're thinking. So we'll see what happens there.
Chance. Well, I will say, just while we're in the conversation, is growth tech, like the growthy Kathy type names.
They're doing okay.
Mm-hmm. They're doing okay. And again, that low that we tweeted out on May 12th has held. And every time we pulled back, there's been more buyers. So I do think, obviously, that on pullbacks here, some of these growthy tech names, which have just been absolutely hammered, could squeeze up a little bit. Are the valuations still reasonable now? No. But are they trade possibilities here? Could you get a little upside? Could you get a 50% retracement of the March-April decline in a lot of these stocks? I mean, ARKK was $70 at the end of March. It got down to 35, cut in half. That's unbelievable. After as bad as ARKK was doing in 2022, then they cut it in half again. So if you think, okay, well, could it get back up to 52 or 53? I think so. I think I'd be a buyer of some of those ARKK positions on pullback. So that's the one thing that would keep me not shorting Roku into this, because I actually think it is kind of primed for a little bit of a squeeze here. There's a lot of people who thinks it's going a lot lower, but it's really been killed. It's really been oversold, and it hasn't been going down, and it had a nice rally even yesterday. So technically speaking, Roku doesn't look that bad.
Look at let's go on ARKK here.
Yeah.
So look at the last three highs. Boom. 482, 485, 484. You're trading up 15 cents in a red tape so far. I mean,
I think you can see
no such thing as I mean, if it holds 44.85, or what even the close was there, just below that, then you have to say we're heading up here. Close 44.78. Yeah. It's tight. Low volume day yesterday. Hey, Mitch, you're not going to get run over by a truck there, are you? Because I hear some beeping in the background.
I hear the birds. It's birds in the background.
Is it birds?
It's so relaxing.
I already saw in the chat. I'm trying to mute myself in between so you guys don't get too much background
Mitch, can you
noise.
give him I changed his name, Dennis, to Movin' Mitch.
Movin' Mitch, baby.
Yeah,
Movin'.
Could you just explain to them real quick?
All right, well, I'll let them know my setup right now. So I'm right now outside of a Starbucks. Yes, I said it. Starbucks, guys. A little advertisement for them as we're running out of them.
Advertising. So. Starbucks should be paying for that.
Hell yeah, they should be paying that. But one thing that I think that is going to be on everyone's radar today is you said about Roku, but keep this one in mind. Vizio. VZIO is a cheaper acquisition that Netflix could maybe be like, well, forget Roku. We'll just go after the cheaper one, Vizio. So
what's
this one's going to be on
Mitch?
VZIO.
I don't follow this company at all, so I'm not even going to comment on this.
No worries, Dennis. I think the relationship is definitely there to watch today because we're seeing Roku go up on this news. You could get some sympathy in here. Okay. So I just keep it on the radar. There's definitely a relationship.
That's good to know that there's, obviously comparables there with Roku because I don't follow Vizio at all.
Yeah, very similar. They're mainly the smart TVs, but they also have their channel business that they're growing.
Yep.
And I think that's what Netflix is looking into is how can we get into TVs directly versus indirectly where people got to download the apps. What if there was essentially like you have Fire TVs? What if there was Netflix TVs?
Something to think about.
Something to think about. Let's go ahead. Let's move forward. Let's get into today. I think this is a very important thing to watch is live on Wednesdays, Piper Sandler's Global Exchange Conference. So there we have Security Exchange SEC Chairman Gary Gensler will give a keynote, and he's going to use the opportunity to suggest changes in the current system for payment for order flow, in which brokers send the order to market makers in exchange for payments. This enables, of course, the zero commissions that a lot of people love. But Gensler has said that there may be conflict of interest with the brokers that have too much power here. And so Gensler's likely to propose that he'll diminish the influence of the wholesale market makers like Virtu and Citadel Securities. I know Dennis is definitely have some opinion about this.
I've talked
so what do you
stuff
think?
For a decade. I've met with the SEC on, payment for order flow and off-exchange market making multiple times. I do wish that they would regulate and bring some of those orders onto the exchange because what happens when you're at a retail broker is your orders typically are not making it to the exchange. They're going to a wholesaler like a Citadel, like a Virtu, which then, take the other side of the trade or then send it on to the exchanges if they don't want to take the other side. So, I'd love to bring those orders onto the exchange to have more competition, to get better pricing. They'll say, well, they're always getting better pricing, but I think you'd have a more competitive, market making experience if it was on the exchange, meaning that the spreads could actually get tighter. So they're marking it against current spreads, and the small caps, I've said for a decade, are a mess because of off-exchange market makers that have basically monopolized those markets. I mean, you go into some of these small caps are very wide spreads. You go into the mega caps, you don't have that problem. Bank of America, tight spreads. Get into that, the S&P, Apples, Amazons, they're tight spreads. It's high frequency traders, lots of participants. There's not a problem there. In the small caps, there is a problem. And there's been a problem there for a long time. And we've seen spread compression over the last 20 years, but the small caps have not experienced that. And I think a big part of it is that off-exchange market makers basically taking the other side of all these trades discourages those liquidity providers that are on the exchange. I know even myself, I used to trade small caps. I don't anymore because I throw my order out there and then I watch it trade at my price and trade at my price. So I'm offering the stock, trades at my price or trades close to my price, a sub penny in front of it because the off-exchange market maker is taking the offer. And then, on the other side, they're hitting the bid. So the spread's there and you can actually make the market be the person trading or be the person with your order out there and not get filled because that off-exchange market maker is simply matching your price. So, or giving some type of sub penny price improvement, which they obviously market out pretty heavily. So I'd like to see some regulation here. I doubt it happens. I doubt we see anything significant to change it, because we've had these markets for a long time now, and there's just been nothing done about it. So right now they're still going to argue that we're getting a better price than the national best bid and offer, that spreads are still tighter than they were 20 years ago, and we have free commissions. So what are you complaining about? It's a tough argument on the other side. So I get it. I get both sides of the argument. I do think spreads will get tighter. I do think retail would have a better experience, but there's no data to prove that, because they've never done a test pilot to do it. So I doubt that we're just going to see wholesale change here, pun kind of intended. But if you look at Virtu Financial, VIRT, the stock which I own, is getting hit hard on this. Also, Robinhood is getting hit hard on this, that they're worried that they actually might regulate it. So if they do, this was always the risk for Virtu Financial. The stock trades really cheap, got a good dividend. It's got great management. It's a high-frequency trading firm, which probably is killing it in the volatile environment that we've been in. But right now, people are worried that, if they regulate this, that their gravy train will get cut significantly there. And that's why they're hitting the stock. But again, I don't believe that they're going to do anything crazy. And that's why I think I'd actually be a buyer of VIRT on this. And I own it already. So full disclosure, I own in the long-term portfolio. So I'm down in it. I'm down in a lot of long-term investments.
I'm just thinking, well, yeah, it's good to talk like this, right? But how the heck are you going to do it? Like, yeah, you can do all the talk, and just like you said, I mean, I know you've been involved in some of these test pilot programs and everything, and it's one thing to say.
I've been involved in putting commentary out there towards it, but they've never really done a test pilot on anything.
They don't know. They're not going to do anything.
They don't like test pilots. They don't want to do test pilots. I mean, they cost a lot of money. They get data, and then the data comes in, and then they don't, the interpretation of the data is up for question as well. So, I mean, it's common sense that if you had more competition for those orders, they probably would get a better price. And that's why he's maybe looking at off-exchange auctions or different ways to go about it, just getting competition. Because why should somebody just, get an order routed directly to them and then decide where the price goes? I mean, they're giving price improvement better, but maybe you could get more significant price improvement if you added some competition to it. So, exactly. I mean, I think competition is a good thing. But again, I'm skeptical that anything drastic will change here.
Yeah. Hey, in America, that's what it's all about, right? Competitive markets, right? We don't want that monopoly style markets.
Well, and that's what they have in the retail.
Exactly.
You've got two or three major players that are executing the majority of retail orders. So, I mean, Gensler is looking in the right place. I think Gensler is doing a very good job. I think he gets it, but it's an uphill battle, because the argument on the other side is, hey, if you ban payment for order flow, well, there goes your zero commissions. So, I mean, everybody likes free trading. So, I mean, that's kind of the give and the take, right? But, I mean, he's looking at different alternatives here. Maybe an off-exchange auction, for multiple off-exchange market makers to get involved to get better price improvement, which is an interesting concept. I mean, a lot of things are interesting. Let's see, what comes about it. But those just hammering Virtu on this, thinking, oh, this is the end of Virtu, I don't think so. Doug Sifu, very smart person. Sal Arnix over at Virtu now as well. They're smart people. I don't think this is the end of Virtu Financial.
Hood back down, just down to a couple pennies. Wow, right back down to the low of the. Wow, right back down to the all-time low, huh? That rally didn't last long in Robinhood. I don't know. I can't remember why it went to 16. And
it's going down because of this Gensler stuff here too. So this is a binary event. If they have something that, if they comes out today and he's not attacking payment for order flow, I'd expect a relief pop in Robinhood. If he comes on fully attacking payment for order flow and we're starting to go down that road again here, obviously this could go down. But I think I'd be more inclined to buy it here, because I just think it's not going to be all about payment for order flow here. They're going to have a hard time banning payment for order flow. They're going to have a real hard time with it, because it's the reason that we have zero commissions. So I don't think that there's going to be that. So I think if people have been hammering Robinhood ahead of this, I actually think it might be a buying opportunity for HOOD.
All right, let's go ahead. Let's keep it going here. Let's go into Docusign, as shares rallied this morning after the electronic signature technology company announced an expanded global partnership with Microsoft. The deal enhanced the integration of Docusign's technology into Microsoft software applications. So what are you guys seeing on the Docu chart?
I would have went bid through 88 for sure. Look at that. That line was in there yesterday. Now up 381, 94.50. 91.55. I just say it's a good thing. Next daily high. I mean, you better make a run here to 96.20, or else I think you got a little bit of a fade. But I mean, it's good news. A partnership with Microsoft can't be a bad thing. It's just, is it immediately worth $4 in the stock? I'd maybe ring the register if I had it.
One thing to consider, it does report earnings tomorrow night too.
Yeah,
so
that's right.
You're getting a run up into the earnings. Obviously earnings, so we got a binary event that's going to happen there too. It's going to be good or bad. Again, it falls into that description though of the growthy nosebleed valuation stocks that are back in favor all of a sudden. So it's not surprising this is held up. Could this see $100 after earnings? Absolutely, it could. There is some major resistance up there though. So I mean, if you're chasing it here, you got to just be aware it's going to have earnings tomorrow night. And that's going to move the stock in one direction or another.
All right, let's keep it going here. I got a lot to go through, so let's go into Novavax after a rising 21% after hours as their COVID vaccine endorsed by the FDA approval panel. And then we'll also talk about Moderna after this, but let's get into Novavax first.
Okay, let's rewind the tape to yesterday. So I've been wrong, and I'm having a bad day of being wrong on a lot of things today. This one I absolutely got correct. Yesterday I said, if this thing has a significant pop, I think that pop will be faded. And this is exactly what has occurred. We've had this significant pop overnight. It got to $59, and the sellers are coming in. Again, I'm going to reiterate what I said yesterday. They are way too late with this vaccine. This is not going to be a game changer. We already have the Moderna. Yes, it's done a little bit differently. So their hope is that the people who wouldn't get the shot, because this is an mRNA technology, the people that wouldn't get the shot from Pfizer or Moderna will get the shot from Novavax. I'm skeptical of that. I think the people who aren't getting the shot aren't getting the shot. So I don't think you're going to have all these people lining up to come get a Novavax shot here now. They needed to get the shot, this vaccine out a year ago when Moderna and Pfizer and BioNTech took advantage of the gravy train. That gravy train is over. People are skeptical that the shot is even helping. I mean, I think it helps, but obviously there's a lot of people that are skeptical of that. I don't think that this is going to, there was a guy, Dom, who was saying he thought the stock could triple in price. I will absolutely take the other side of that trade. That's why he said it was 56 last night. I will absolutely take the other side of that trade.
Too much,
I don't think this is the case. I think we've already had the COVID bubble for all of these stocks. And I'd actually be a seller of all rallies in this. It's $59 now. I have no position in it. But, it's from 59 this morning or last night down to 51. I think the sell-off is justified from where it was last night. I didn't think the rally was justified at all.
There is a segment of the population that has been waiting for this, based on whatever the ingredients and the care that goes into it. So I that is a valid point, but I mean, come on, man. When did Pfizer come out with theirs? November of 20? And now you're
so late, man.
Yeah, it's just
way too late to the party.
Yeah, I agree. And then also you got people stuck in this thing, and people. First of all, people. There are a lot of people that just played this for the reaction, right? They were buying 2 days ago. They were buying yesterday, and they're like, if this gets approved, it gets anywhere over 55. I'm selling. And then they sold. They took a flyer on it. So they don't care. They don't care about you people that own this at 60 or 65 or 70 or 390. They don't care about you. 331.68 is the all-time high. They're just in it for a trade. They're done. They move on. Boom. I'm out. I'm done. Wow. That was an easy trade. And then, boom, they're out.
It would not surprise me if this stock actually went red. It would not surprise me. That would be such bad news for this stock if it went red. I mean, this is as good a news as you can get for this stock, and it just gave back 2/3 of the gains, which we predicted on this show yesterday. So I just don't. They're too late, Joel. They're too late. Mitch, what are you saying?
We got some supporting news today, at least. I don't know if this is going to help or hurt it, but let's talk about Moderna. Moderna announcing today Omicron-containing bivalent booster candidate. It's demonstrating demonstrating superior antibody response against Omicron. So you guys are seeing Moderna up on this news. I'm just wondering, does good news from Moderna's Omicron kind of vaccine, does that help NVAX or does that hurt it?
No, and Moderna's now turned red on it too here. So this is a nothing burger headline in my opinion. I mean, again, it's good news that it's working against, but from a trader's perspective here, traders aren't even looking at COVID anymore. I mean, they're not looking at it as a problem anymore. At least maybe in China, they're looking at it as a problem. In North America, people and traders are not looking at COVID as a problem. You're not hearing it at the top of the news. Remember a year ago, it's the top of the news, COVID. Now the top of the news,
inflation.
Inflation is really what it is in the business news is inflation. That's the bigger problem. We're dealing with the repercussions from the pandemic, but the pandemic in itself is really no longer a pandemic anymore. I mean, the people who are getting Omicron, the majority of those people are getting better. I feel very bad, obviously, if somebody has a bad outcome. There has been some bad outcomes. I still got vaccinated. I got my kids vaccinated. I think it does help, but again, I don't know. I know lots of people that didn't get vaccinated, though, and had an okay time with it, too. I don't personally know anybody that died. Thank goodness. I personally don't know anybody that died from COVID, though. And I know a lot of people that had it.
Yeah, they did.
So,
Roku
that's the
back
good news.
under 100.
That's good news.
Yep. Roku back under 100 here. I'm seeing last print at 98.80. So being faded right now. Good volume, though, but you might have missed your chance to sell that in triple digits. Hey, Mitch, are you by a hospital or something?
He's got a lot going on in the background there.
I guess there's emergencies out there, and when the dogs go barking, the dogs go barking. But speaking of dogs, let's go to Chinese stocks. Hong Kong's Hang Seng Tech Index today advancing after 60 new video game approvals, encouraging the view that China is loosening on the crackdown on internet firms. Let's go ahead and definitely pay attention to that. I think it's an important news as you're starting to see better news catalysts starting to flow out of China. What are you guys thinking about this?
There is Joel, you were saying this earlier. This market is looking for good news. It keeps finding it, and it's the silver lining market here again. And that's why it'll be very interesting with the CPI report. And if we show anything of a soft number, we could really get a rip your face off rally. I brought my now cash position down my long-term account to 40%. So I'm starting to put more cash to work. I'm not going to go down, to all in on this market because there's a lot of unknowns, but I am still nibbling. I actually bought, which, I've had, but I bought some more Qs. So I'm like literally just
nibbling
on, good companies, reasonable valuations, and, obviously, not so much being rewarded yet, but hoping to be rewarded longer term. But I mean, we look at the Chinese stocks, Alibaba, we put basically, a multiple bottom in the low 80s. And now for the last 10 days, we've been going straight up. So you start thinking, could Alibaba see 120 again? It could. I mean, some of these Chinese stocks have very reasonable valuations. It's always just been, we've been skeptical on how much you can trust the numbers. So, and what's coming over there. And then the whole macro picture of China, locking down because they get 2 COVID cases, the Taiwan situation. There is some unknowns there. So I still stay away from China for that reason. But you can't argue with the technicals here. They're looking a lot more healthy on a lot of these names. And the growth stocks, the Cathy type names, and China stocks are kind of correlated together too. Baidu, we're $150. We were $100, $101 in Baidu 4 weeks ago. And now we're $150. So this is just a quiet 50% rally in Baidu there. JD, similar, not quite as extreme of a rally, but coming off and starting to look healthy here. So right now, China looking better.
Yeah, and it's hard to give technical. I mean, if you want to play these things, you got to be in it to win it, man. You got to put it on at the close. I don't know if there's enough liquidity to hedge with the FXI. Is there, Dennis? Is there any you wanted to? Yeah, there is.
Yeah, I do the FXI. So if you're interested in just the ETFs, China's your FXI is one of your straight up China ones. You go KWEB if you want like the Babas, the Baidus, the Tencents, like the more internet focus of it. But then if you just want coverage over Asia, you can go with the EEM or the VWO. Those are very liquid ETFs. and obviously, those are, ways to play it as well. So MCHI is another one in China as well. So lots of different ways from an ETF perspective if you just want coverage across Asia or China.
But I'm also talking about, like, if you got to, like, you want to flip a coin, whether China's going to come out with good news or bad news on the, on the sector, right? And so you take a little BABA home, that's up 4%, and then what the KWeb, what's that? I'm just looking for some kind of
up 3%. KWeb moves very well with BABA.
So there you go. So yeah, you could have had the whole 4% if you had the BABA. But if you would have done the spread, I'm just, I don't know about slippage.
I do. I hedge myself lots of times.
I know you do, Dennis. I'm just trying to explain to people that what I'm trying to say is, like, the technicals are tough for me to do. Like, when I see this KWeb high here, I'm like, okay, and I look at this BABA high, I'm thinking I missed it. Sometimes it's wrong. Maybe it needs to get, maybe it can get back up to 111. I don't know, but it, like, that 4 a.m. pop, is what I'm saying. That's when you get the prices. So that's what I meant by taking it home and using a potential hedge.
All right, let's keep it going here. Let's talk really quickly before we get to
We're leaking here.
Yeah,
I just want to say we're leaking.
A little leakage.
Yeah. Did we have any?
I don't see any news right now.
8:30. It's just it's not a pounding. Wow, what a trading range here. And I didn't go into this much at the top of the show, but yesterday, right? Oh, the market was down, then we get targeted. And look at that. We got right down. We couldn't get to my bid here at last week's low, right? We have a rally, and then it starts the end of the day, and I'm like, yeah, this can get to Monday's high. And boom, it stops 4 points of Monday's high. And now, this market's waiting on Friday, and this is a trading range. You know what? Trading range, this is either a consolidation to get a good number on Friday, bust over 4,200, or boom, take out the lows from last week. And I don't want to say the low of the move at 3807.50, but we're winding up here really nicely for a big move. And I think it's going to be predicated on what comes out of that CPI. I'm not thinking, I'm no genius, but what comes out of that CPI data.
One thing to consider, 100%. And Spinner's correct to look at this, is the TLT continues to get whacked here. And we are very close, perilously close to the 52-week low in the TLT. So we know bonds have taken it on the chin this year. It's been one of the worst years, one of the worst starts for the years in the bonds in decades. And they continue to, which makes sense. It made logical sense. If interest rates are going to go up as fast as we've taken them up in a long time, bonds are going to get killed. So people ignored that we knew it was coming, but people ignored it all the way to the end of 2021 and into the beginning of 2022. And now they're not ignoring it here. So you do think, like, I know the inverse correlation exists there with the TLT and the banks, but the banks just don't want to find a way to rally either. The banks have the, obviously higher interest rates help the banks, but the higher short-term rates help the banks. But the biggest issue that we still have here is that people are worried about a recession. And if
the TLT,
that hurts the banks.
Matt, the TLT is the 20-year Treasury bond ETF, and that basically mimics the futures, the 30-year futures bond that's traded at the Board of Trade, probably one of the heaviest volume contracts, and it's basically opposite of interest rates. Interest rates go up, this TLT bonds go down. And vice versa. And you can see that the heyday we had during that was March of 220, but it's just it affects your bank stocks. It affects everything that's interest rate sensitive. So that's what the TLT is. So all right, it is.
And the yield stocks, typically REITs will follow that. But again, we've seen this decoupling here where stocks are doing their own thing, but the TLT starts to break down and make new lows. It'll spook the markets too. So Spinner, correct. Keep a good eye on the TLT. You don't want to see that make a new 52-week low.
You know what? We need some stats. And we got the stat man here. That's Ryan Detrick, Chief Market Strategist at LPL. I might even have Mitch make up a video, an intro video for the stat man. Where's the stat man?
The stat man.
Yeah. Good morning. Yeah, I need like an intro song or something.
We're going to get you an intro song.
Oh, you know what? I already have the song.
What's that?
Catmandu?
Yeah.
Ted Nugent?
Oh, yeah.
We could do it Statmandu. And then to play Ted Nugent in the background and then have you come swinging from a rope. Do you know Ted Nugent? Did you ever see him do that?
Yeah. Motor City Madman. I was thinking more like the Ultimate Warrior when he like grabs the ring and everything and starts shaking it. I've never had an intro like that before.
All right, the show's picking up now. Ryan's like, oh man, why'd I come on today? Okay, Ryan, what do you got for us?
Let me see here. I've got. Let's see if I can share my screen. Hopefully, technology works. Here we go, guys. Well, first off, thanks for having me. I know I've got about 10 minutes or so. Got to go talk to our advisors here at 8:45. So let's just dive into it. I love the discussion you guys just had about some of the strength we're seeing in tech, which is true, and clearly the weakness we've had in bonds. But I want to show maybe there's some hope, right? I mean, obviously, I know a lot of people listening to the show are more short-term traders. I'm a little more bigger macro view, but I just want to point out this. Hopefully you see the screen. These are the 5 worst starts to year ever. This was the 4th worst start as of day 100, which was recent. You can see the rest of the year returns. It is what it is, right? Up 19% on average. So just try to bring some potential good news here. And this is stuff that I've talked about before others. Is this normal, right? The average year sees a 14% correction. We've seen a 19%, 20% intraday on S&P. And I know different parts of the market have pulled back more. When you go back in history, guys, we've seen, pullbacks after a year like last year with only a 5% correction all year, 30% gain. I'm going to share some other charts here about midterm charts. It kind of made sense. We'd see some volatility this year. LPL Research was on record as saying a 10 to 15% correction was very likely. Did we think it'd be quite this bad this early? No, we did not. But again, this kind of makes sense. In the last 42 years, 21 of them have seen a 10% correction, at least one point during the year. 12 of those, so that's more than half of them, have actually come back to finish positive. So I think what's the S&P down? 13, 14% for the year. It's the old Jim Carrey quote. We're saying there is a chance that maybe, because the destruction happened so early, we could come back. Briefly on bear markets, I think this is fascinating. If you're not in a recession, it's actually not that fascinating. It's probably obvious. If you're not in a recession, bear markets don't usually do as poorly, all right? Like 24% on average if you're not in a recession. We still don't see a recession. I get a lot of the worries that are out there, but we just don't. I mean, I travel a lot. I was in Nashville yesterday. Tell Nashville it's a recession, all right? I mean, it doesn't feel like a recession out there. And just think about this. In 1976, 1998, 11, and 18, all those years saw 19% corrections on the S&P before we bottomed. We just had a 19%er. History doesn't repeat itself, but often rhymes, said Mark Twain. Kind of interesting. And I want to we'll skip this one. I just want to spend a couple minutes on midterms so we can maybe talk a little bit. Talk about Ohio State football, Michigan football, whatever you want to talk about. Midterm years, we knew coming into the year were rough. And I've talked about this before, but the average midterm year pulls back 17%. We knew that coming into the year. The good news, a year later, you're up over 32% on average. A couple more things quickly on midterms. 4-year cycle, you break it down. These quarters we're in now and last quarter and next quarter are terrible quarters historically. We knew that about this year coming into this year. So again, maybe this weakness isn't totally surprising. I was pointing out the fact, remember Dave Portnoy, guys, when he was doing his crazy stuff? He looked out the window and saw a deer and bought deer, and then it went up. Remember, I mean, like he was literally playing Scrabble, picking stocks. We all remember this stuff. It was crazy. It was hilarious. But talk about the market's not that easy. It was due for some pain, and you see that stuff. Amazing. 2 more charts and we can talk. Midterm years, if you buy the midterm election, whenever it is, that first Tuesday of November, which is coming up, obviously, since World War II, stocks have never been lower a year later. Never been lower a year later. That's if you buy in November. So I'm aware we're not there yet, but just something for investors to pay attention to. The average is like 14% return a year after the midterm election. So seasonality right now is no favorites, but we're getting there. And then this, the average midterm year election. All right, with midterm election, the first president, it is what it is. Don't get mad at me here. It is what it is. Loses about 30 seats in the House. All right, we know that. The motivated party tends to win a little more seats. If that happens, right, you still have a Democratic president. Probably Republicans take the House. Maybe they take the Senate, probably by 1 or 2 seats is what it's looking like. Take a wild guess what the very best scenario is for stocks historically. A Democratic president with both chambers of Congress Republican. So markets sniff this stuff out. They kind of sense it coming. And again, I know there's sample size issues and you can point flaws of what I'm sharing right here, but I just think it's important to note that, that is the strongest scenario and is likely the one that we're going to see this coming November when the election's over. All right, guys, that's my opening comments. What do you want to talk about?
That was a lot of information to digest.
I threw it in there, man. I know I was
like a 6-week course.
Yeah,
it really was. Yeah. I mean, there you go. That's what Ryan Detrick's all about here, though. So I think you're trying to tell me that we got a chance here that, hey, there may be a chance to an opportunity to buy some stocks here.
I think so. And, I was hoping you'd give me a curveball or an easy one like that. Just check this out. We had a 6% gain 2 weeks ago. I know we remember. We had a 7-week losing streak coming into it. Historically, one of the longest losing streaks ever. And I know you guys have talked about this. China goes on lockdown. We have a 7-week losing streak. China's out of lockdown. All of a sudden, markets are doing a little bit better. I don't know if that's coincidental or not, but I don't think so. I think it's also the Johnny Depp trial. Isn't it amazing? Johnny Depp trial in China started at the same time, and they ended the same time, so you can't make that up. But when you look historically at 6% weekly rallies, again, it is what it is. Sharing on the screen here, up over 20% a year later, 22% a year later, I guess. Higher, 19 out of 23 times. Because, markets are usually getting killed, and that's when that bounce happens. So that's kind of important. And the one other thing I'll point out here, 7-week losing streaks are super rare, only happen a handful of times. Check it out on the screen here. 1970, 1980, 7-week losing streaks. A year later, up 30% on average. That's not too bad. But the one that didn't work was 2001, 9/11, recession. Things did pretty terribly a year after that. So again, is it as simple as if we go into a recession or not, things could be a good deal higher 6 to 12 months from now? I do all these numbers. We think that's the case. And again, things are slowing, yes, on the economic front, but we still just don't see recession. So investors, who knows? There could be a little more pain. Your average midterm year doesn't bottom until the middle of August. Your median midterm year doesn't bottom until early September. So trust me, we're not out of the woods by any means. But I think it's the time for investors to be using them as an opportunity for likely good deal higher prices 12 months from now if we get to do this again. Or when we get this again.
I know you're a lot about the stats. I want to throw a quick question here. I know we're up against the clock. Sure. Are you putting too much emphasis on what's coming out of the Fed next week and its impact, or it's all about the Friday CPI data?
Yeah, we'd say it's all about CPI data right now. I mean, the Fed's kind of in a tight spot, we know. And you look at used car prices coming down, fertilizer prices coming down, shipping costs coming down. Is it light at the end of the tunnel or a train coming at you? We think it is light at the end of the tunnel with some of this inflation data that's saying, hey, we could be there. Our chief economist thinks we've hit a peak in goods inflation, not a shock. We all bought everything during the pandemic. Services inflation likely to peak a month or so from now, but overall inflation is probably there in our opinion. And that is probably that one thing that can kick off the second half of your rally, just some confidence. I mean, what Target say, right? Probably last thing I can talk about here. Target said, hey, we got a lot of stuff. We got to start lowering prices until we can't sell it. Market sold off initially and said, you know what, maybe that's not so bad because they're going to start lowering stuff. Finally, some disinflationary, deflationary pressure is taking over. And it's not great for Target or retailers, but hey, it's a sign that maybe prices are going to finally start to go lower because of all the inventory. So it's a big mess out there, but sometimes a mess and lower expectations like we're seeing, that can lead to potentially higher prices, and it does start, we agree, with some positive news on inflation. Hopefully
okay, it was cat scratch fever that I was thinking of instead of cat mad. Yeah, I stand corrected. Okay. You're moving up. You're in the top 3 for most well-prepared guests. That's Ryan Detrick. He's chief market strategist at LPL, bringing it on pre-market prep. Thanks, Ryan. That was fantastic. Go to work, man. Go get paid, buddy.
All right, we will. See you guys. See you next time. Bye-bye. Thank you.
See you, Ryan. So many stats, so many great stats. I mean, and it gives you perspective here. And, it's great to hear. It's great to hear the bull case and the bear case. I mean, you as a trader need to, make your decisions. A lot of people say I'm bearish, which I definitely have been for a while here now. But you can feel that, I've started, like I've been saying, I was 52, 53% cash long-term portfolio. I'm down to 40. So I'm starting to nibble here, meaning that a lot of bad news is priced into stocks. We have had the correction. I was absolutely correct to raise a lot of cash at the end of the year last year. I was absolutely correct to be bearish stocks coming into this year. I'm starting to feel like I need to not be as bearish. I'm not full on bullish yet, but I need to start weaning myself off the bear train a little bit because a lot of bad news priced in the stocks. We've went down. We've had a serious correction in a lot of stocks. And deservedly so, it had to happen. But, at a certain point in time, stocks stop going down. They don't go down forever. So is this the bottom? I think we kind of on ARKK already had the bottom. I think I called it May 12th when I tweeted it out at 9:40. I was like, it felt like capitulation. So we've had the short-term bottom. Is it the bottom? We don't know the answer to that question. But is it a bottom? Absolutely. May 12th on ARKK was a bottom. So Can you come in here and safely buy stocks now? It's hard to say, but I like the consolidation. I mean, you look at these growth names. We've been in consolidation for the better part of May and the beginning part of June. It gives you a chance to like take a shot. We start to break down, you get out. So it's all just risk reward.
Yeah, my biggest thing is, of course, CPI data is just going to have that literally both ways, right? I think, you know, if you get a horrible CPI data, then boom, there goes that bottom.
That's all that matters.
So
that's all that matters, Mitch. It's all about Friday. And what did we say at the beginning of the week? We said we were going to see a lot of chop ahead of this. That is all that we have seen the first 2.5 days here is chop. You know, Monday, we rallied a little bit, sold off. Then yesterday, we sold off, and then we rallied. I think we continue to chop around until we get that information, because the real big money managers out there want to see that the Fed's plan is working, and we need to see that in Friday's data. If we don't see that, if we see inflation ticking higher, then Katie bar the door, we're going to have a whole world of pain. But if we see some improvement, if we come in lighter than estimates on the CPI, you could have a rip your face off rally off of that. So I think that I'm at a point where I don't want to be full on bear, because if we come on and we actually show some improvement there, I don't want to be left holding a bunch of cash. So, I mean, I've got to have some put to work. So I think I'm kind of market neutral here, where I've been very bearish. I'm kind of feeling more market neutral now, where I don't want to go on full bull and all in, but I don't want to be full bear and all cash. So I'm kind of market neutral right now. Let's see what happens on Friday, and that will dictate the course of the moves for the next few weeks.
All right, let's go ahead. Let's get into here. Let's talk a little bit about some earnings here. Let's go into Campbell's. Campbell here, EPS 70 cents, beating the 61-cent estimate. Sales were at 2.13 billion, beating the 2.05 billion estimate. So Campbell Soup, a beat and a beat here. How's it looking this morning, Joel?
I was going to say, I was going to get mad at Dennis because I kept on trying to say something and he just kept on going and I'm like, I want to say something.
What do you want to say? What do you want to say?
And then I look and it's like mute. I'm on mute.
Oh, it's the old mute trick. You were trying to interrupt me and you couldn't even interrupt me.
I couldn't even interrupt. I'm like, man, he is really on a roll today. I've tried like 3 times to interrupt him and he just runs me over. Just a couple things here. Just Ryan, you know, like the eyeball test. That's why I'm kind of in the neutral mode too. And I like that that comment he made about Portnoy. And, you know, he saw a deer, he went out and bought deer. That's not going to be the kind of market that we're going to have back on the way up. It's going to be more zigging and zagging from what you've seen. And then I just bring it up to SPY chart, Dennis. I mean, you're neutral. Look what the spider's doing. Like, how
it's
can
neutral too?
How could you sit there? You know, look at this: 1, 2, 3, 4, 5, 6, 7, 8 sessions in a trading range. So let's go to the Campbell Soup numbers. And I know Dennis has an opinion on this one too.
Yes, I do.
All right, give me the numbers.
So give us the number. Oh, yeah, no, Mitch just did it. Mitch gave us the numbers.
Okay.
So what I found interesting, and I'm fully out of the trade now. I had a trade on this, so I'm out of the trade now, so I can freely comment on it. What I found interesting was, you know, the raised guidance. And if you go and you dig down into the raised guidance, they raised their sales guidance from -1% to 0% to 0% to 1%. They literally raised it 1%. And that's the big raised guidance that everybody's talking about for Campbell Soup here today. So I think when, you know, it was rallying up to 49, that's just algos reading raised guidance, buy. And it's like, it didn't raise guidance very much. So I think coming back in here makes a heck of a lot more sense to me now. Again, I'm fully out of the trade, so I can freely talk about it here. But, you know, up 2% kind of makes sense. When Campbell's was up 5 this morning, I felt like that was dumb money.
And kind of with Campbell's, like there's some stocks that like when I automatically see up $2 on like 4,000 shares, I'm like, you know, who's buying this thing up $2 on? I don't care what, I don't care if Campbell Soup, cures COVID. I mean, it's just, it makes these moves and then it reverses. So will we get to I'll just give you one number, top of yesterday's range, 46.64. That's $1 away. That's the first place I would have a bid out there. The high was right near there. And then on the dailies, I mean, you're going to have a tussle at 48. Look at all those highs. 1, 2, 3, 4, 5 highs right around 48.
All right, let's go to the next earnings on the day. Ollie Bargain Outlet. I actually just to kind of give some insight. I actually went to an Ollie's this weekend. There was one close by. Yeah, and it seemed a little bit busier, but their earnings not showing it here. Adjusted EPS missing here at 20 cents. Estimates were at 30 cents. And the sales were at 406.7 million, missing the 417.24 million estimate. So miss and a miss there for Ollie. And I mean, in an inflationary environment where prices are going up, you would think that the Dollar Tree stores and these bargain outlet stores would be doing well, but doesn't seem like they are right now.
Well, Dollar General was doing very well, and Dollar Tree did well in their report. So you automatically would think that Ollie's would do well as well, Mitch, but not the case here for OLLI. They bought this ahead of the report too, so absolutely leaning the wrong way, the market, buying it up ahead of the report yesterday, and now it gets hit. So yesterday's low, 46.94, that would be my first area of support. I think if I was sure, that's where I'd bring it in. If you're looking to get long, I think I'd wait a day and just see how they digest this, because the one thing to consider is that your point that Dollar Tree, Dollar General are pretty good. Ollie's not that good. Makes me like, okay, well, what's wrong here? So I'm skeptical. So I'll just stay away. And obviously, there could be some dip buyers that come in here. Maybe they're going to shrug it off. Maybe the devil's in the details. I'm just skeptical, so I'm staying away.
Nick, it's not Campbell chicken soup that's good for colds. It's matzo ball soup. He's telling me about Campbell soup. Ali, I don't have much an opinion on this one. 48.50 is really in the middle of nowhere. I guess if you regret not buying this ahead of the report, then maybe you get a look at 46.94. That was yesterday's low. So silly number, and probably be good resistance at the close of 50.99, since that's everyone bought it ahead of the report, and that's $2.49 away.
All right, let's keep it going. We got more news to go through. How much can I get through before 9 a.m.? Let's go. Smash that like button. Let's get this on up, guys. Spirit Airlines shareholder meeting postponed until June 30th as they continue deal talks postponing here. Frontier and, of course, JetBlue Airways battling here. Spirit announcement came 2 days after JetBlue sweetened its offer for its discount airlines. The battle's on here for Spirit Airlines. What are you guys thinking?
It's so interesting that, the battle was on when this thing was $27, $28, and then it went down to $16, and the battle was still on to buy this thing. So the opportunity was they were throwing the baby out with the bathwater when they were hitting this in mid-May, and knocking all the way down to $16 with two potential buyers on the table was a gift. It's come back up. It's back at 22.5. Obviously, JetBlue's talked about over 32. I think it was $32, the potential bid there. We know that would face major antitrust scrutiny if that was to be put through. And then there's obviously the other deal on the table too. So I don't know how this story ends. I think on pullbacks, if say was back down at $19 or $20, I'd get interested, but it's kind of run here now.
There's been so much back and forth that, and going on with this and a much higher price. I mean, you know what I have to say to all these airlines? Hire some pilots. Don't worry about taking. I mean, maybe if you're doing a consolidate and get more pilots, but focus on that. I mean, I don't know. No opinion. Way away from the takeout price. Obviously, a lot of skepticism.
All right, let's keep it going. I got one more here. WDC Western Digital saying it's reviewing strategic alternatives after activist investor Elliott Management, which owns 6% of Western Digital, is trying to talk to them about splitting its flash memory and disk drive businesses here. So WDC up on this news.
Oh man, the stock is a tough one too. I mean, the chips have been getting hit here. This has actually been resilient and been holding up a lot better. I own Micron, which it's at the same price I bought it basically, but it's been chopped around so much. I don't know what to say. I think Elliott's in there. They're doing some stuff. Maybe they're going to split this company up. Maybe it's going to rally up, but stock's not cheap either. I don't know. I'm just on the fence on WBC.
Yeah, I mean, he's talking a good game. It's already had a good appreciation since he came out with this plan. He says it's worth like $100. So if you split the two companies, so if you believe that, buy the stock. Here's where your downside is. It's like, well, yeah, we reviewed his strategic, and we think it's stupid, and we're not doing it.
Yeah,
And,
that's true. That happens.
So I mean, they're reviewing it, but there's no guarantee that it's going to go through. So your risk is, when did he start pumping this thing? It must have been that gap at 54. He was probably buying it from 46 to 54, puts the news out, goes from 54 to 63. And now he's banking on them, taking his whatever idea is to split the company.
I'd rather see the company rather than split up is like figure out a way to reinstate that dividend. They killed the dividend quite a while ago and they never reinstated it. I don't know if there's a plan to reinstate it or not, but obviously, the stock has bounced back, sentiment has turned, maybe profitability has turned as well. I'm not following close enough to know that. But that's what I would like to see. I'd like to see a reinstatement of the dividend.
All right. Last thing I'll do is let's do a little bit of a deeper dive conversation before I get to go over to Pre-Market Prep Plus. If you guys want to get into some tickers with Joel Elconin, of course.
Great turnout yesterday. I just want to say, man, we had some technical problems with pre-market at the close, and it just got us at the last second. We switched over to premarketprep.com and all the boys showed up.
Nice.
That's what I love to hear.
Yeah, it was great. They were going at me. It was hard to talk for 25 minutes straight, but I've learned from the best, so it wasn't too hard.
I had the one long run-on sentence.
Let's go with the deep
worries.
dive.
Let's talk about housing. The average contract interest rate for the 30-year fixed mortgages moving up here increased from 5.4 from 5.33, and the applications for a mortgage to purchase a home fell 7% for the week and were down 21% lower than the same week 1 year ago. So definitely housing slowing up here. You could throw some charts or whichever kind of stock you kind of want to take a look at, but definitely, what are you guys thinking about housing?
Well, again, I've given thoughts on this for a while, and obviously building a house, I know how expensive everything has gotten, and the housing stocks have been killed for, quite a while here. They were definitely value traps at the top. They've come off. They've priced in a lot of bad news. That's the good thing. The bad thing is I still don't think there's a hell of a lot of people, going to be going out to build a house with the prices of everything. I mean, the average house, and I think, the average house cost to build is up 40-50% in basically 2 years. So, I mean, it's expensive. So I think if we are slowing down, if you think we're going to slow down if the Fed's plan works, housing still takes a hit. So it's been a nice rally for some of these housing stocks just recently off of the lows, but I still have trouble getting on. I'd rather own some other stuff than housing. It's a tough environment for housing still.
I wish I would have looked this up before. When did we have David Trainer on? And he was talking about, he said this on the show, and it was a couple weeks ago, and I'm in the snap mode. I want to get out of that. He said that this was after they had earnings, that DHI was priced as if future profits are going to fall 70%. 70%. That is, and I think it was back in this area when he said that. My overall view on, obviously higher interest rates, and this is just painting this with a really broad stroke. We need new housing. We need different kind of housing. Is it going to be these big, mansions and behemoths and things like that? I just think there's smaller families now. There's, maybe the colonials are not what they. So I think that there's going to be a transition. And I think there's a need for new housing. I don't think it's like, you're going to get rich buying these housing stocks, but I would focus the ones that are more on, the median income, the lower price homes, and kind of replenish that housing for smaller people. So, or not smaller people, but smaller families. So that's just painting the entire housing sector. And as opposed to investing in stocks over the last year, I've got involved in some housing real estate projects that I'm pretty pretty comfortable with. I mean, I'm looking at 5-10 year, time horizon on it, but that's where I put some money to work, not necessarily in DHI, but I'm comfortable with that.
There's still real estate in certain areas where they're, obviously different markets have come off and some markets haven't come off at all. I mean, Ontario, I believe they're telling me the stats, average house price down about 10%. But when you look at it, you're like, oh man, that's bad. But yeah, the average house price in 3 years is up 100% in Ontario. So you got to give it perspective. In some areas, obviously housing prices didn't increase that much. So they're not going to be as
I got to hop. I'm going to go talk to Wednesday with Wedbush, Moshe Katri. He's going to talk payment stocks. So join me over there. On
Wedbush on Wednesdays with Joel, PreMarketPrep.com.
All right. Thanks, guys.
All right. There you go. We'll start wrapping on up here. Like always, we'll definitely pay attention to see what goes on in the market today. Yesterday, we got a little bounce back in Target.
I just want to interrupt you for a second. With those birds in the background, I'm like, I was having a bad day. But then with those birds tweeting in the background, I feel relaxed now. You calmed me down. This is like therapeutic here. You having the birds at the Starbucks in the background there. It's good. I mean, I'm
shout out to the Zen Bullish. Zen Bullish. Yeah, I always see him in the chat.
Calm me down.
The Zen. We're bullish, baby. Let's get it going. We'll see what happens in this market. Now. Hey, Dennis, you bounce back like you always do. Do what you do best.
And try, man.
Go
big
trade,
hole,
baby.
Big hole.
All right, go handle that. I know Dennis will handle that. I will see you tomorrow, Dennis. I'm going to go ahead and wrap on up here, right here on Pre-Market Prep, the best morning show out there. There isn't anything better. So do us the favor. We want to get some more people in here. Share this with your friends, even the people that are not interested in the market right now. Maybe let them know, hey, do you just want to check out a morning show that's really great, entertaining, gives you information like Ryan Detrick on today, market strategist from the LPL, giving us all that data. Hit the thumbs on up. This is the place where you want to be. None other than, of course, Benzinga. Let's keep it going. Up next, you guys got live trading. Stick around for that. I'll see you guys there. And of course, like always, hit the subscribe button below and let's keep it going on none other than Pre-Market Prep. I'll see you guys next time and keep battling out there the only way we know how.